Imagine waking up to find your country's biggest customer has just slammed the door on your biggest industry with no warning, no negotiations, just a tweet and a tariff that changes everything overnight. That's exactly what happened to Canada in 2025 when the US imposed a shocking 25% tariff on Canadian oil, ending decades of energy independence in a single stroke. But Canada didn't crumble. It pivoted, and the most unexpected twist, it found a brand new partner across the Atlantic, the European Union. This is a story of trade wars, energy desperation, and a $21 billion pipeline gamble that could redraw the global energy map. For decades, Canada's energy strategy was simple: pump oil from Alberta's vast oil pipeline south to the US and repeat. But that system relied on a stable relationship with Washington. When the US government imposed a 25% tariffs under Section 232 of the Trade Expansion Act in January 2025, everything changed. This was the same mechanism once used against Chinese steel, but now it's aimed at directly its northern neighbor. To put this perspective, Canada sent 4.3 million barrels of oil per day to the US in 2024. That's enough oil to fill 270 Olympic swimming pools every single day, generating $143 billion in annual. But overnight, that revenue stream was at risk. This wasn't a tax, it was a seismic shift on North America trade relationship. But its really tension had been brewing for years. Keystone XL was cancelled. Dispute over electric vehicles subsidy escalated. When President Donald Trump tweeted Canada's energy monopoly ends now in December 2024, Ottawa knew the writing was on the wall. Canada needed a new market and fast. The European energy nightmare and the Canada's opportunity. Meanwhile, Europe has its own energy crisis after banning Russian oil in response to the 2022 Ukraine invasion. The EU scrambled to fill the gap. Supplies from the Norway and Middle East Venezuela helped, but they barely enough. Russia once supplied 2.4 billion barrels daily, a 25% Europe's need. By 2025, the energy inflation had spiked to 18%, and with Germany shutting down its last nuclear plants, the continent was desperate for stable, democratic energy partner. Entered Canada. Under the 2017 CETA trade pact, Prime Minister Trudeau offered European an initial 300,000 additional barrels per day by 2026. And here, what stunned Brussels, Canada proposed something much bigger, an entire strategic realignment. The vision: within a decade, Canada could replace the US as Europe's primary transatlantic energy partner. The 21 billion debt and its risks. To make this work, Canada needed infrastructure. Entered in 21.4 billion Trans Mountain Pipeline expansion, the TMX. This long delayed project had faced 12 years of protests and setbacks, but by 2025 it was finally outlined, tripled its capacity to 890 barrels per day. That's enough oil to cover half of Germany's daily needs. For Europe, this was a lifeline. For Canada, it was a high stake gamble, bypassing US infrastructure to ship oil directly across the Pacific. But there's a catch. Canada isn't like the Middle East where oil tankers can load and go. The TMX pipeline ends in Burnaby, British Columbia, a port with narrow ship lanes and strict environmental restrictions. Right now, only 34 tankers can leave per month. To meet EU targets, Canada must triple that capacity, something experts say will take until at least 2028. The race is on. Now let's talk about the elephant in the room: climate change. Canada's oil sands are among the world's most carbon intensive operations, 18% dirtier than the global crude oil average. How does this align with European Green Deal? The answer: a quiet compromise. Under the EU's carbon border adjustment mechanism, Canadian oil exporters pay carbon fees. But unlike OPEC suppliers, they avoid the EU's high risk supplier destination transaction. Ethics over ecology. Europe is willing to pay a premium for the oil from the democratic ally rather than the dictatorship. A sweetened deal, Canada is offering hydrogen partnership and critical mineral agreements. As EU Commission President von Dylan said last month, this isn't transactional, it's transformational. Critics argue that Europe is simply replacing one fossil fuel dependency with another. But in today's geopolitical climate, energy security trumps purity tests. The globe aftershocks, this seismic shift is already rippling through the global markets. In Houston, Louisiana, the U.S. refineries built for Canadian heavy crude oil are scrambling to replace them from Venezuela and Saudi Arabia at much higher costs. Gasline prices in the U.S. Midwest have already jumped 14% since March. Meanwhile, China is keeping a close eye, looking to scoop up discounted Canadian oil if Europe's demands falters. But the biggest shock waves are diplomatic. Canada's move has upended NORAD's energy solidarity doc. Some U.S. senators are now threatening retaliation, including blocking Canadian LNG projects. Yet, with European guaranteeing long-term contracts through 2035, Ottawa seems willing to risk its special relationship with Washington. So you ask, what's next? By 2026, Canada plans to ship 1.2 million barrels per day to Europe, 4 times its pre-crisis level. That would account for 12% of EU's total oil needs, compared to just 3% in 2022. Ambitious, absolutely achievable, only if three things happen: continue US-Canada tensions, stable European demand, and no major TMX disruptions. But this is a plenty of wild cards. A Democratic US president in 2028 could reverse tariffs. European Green parties might block long-term contracts. Indigenous groups along TMX routes could delay expansion with legal challenges. Yet, for now, Canada's strategy is clear. In a fractured world, the reliable partner matters more than perfect ones. As the first Canadian tankers dock in Rotterdam this month, they carry more than oil. They carry a geopolitical gamble, one that bets Europe's hunger for stability outweighs environmental ideas, and the Americans' trade war wrath won't escalate. From Brussels, it's a welcome surprise. For Washington, a wake-up call. And for Canada, the boldest energy pivot in this history. The world is watching. The question is, who will blink first? So what do you think? Is Canada making a smart move by shifting away from the US and betting on Europe? Or this is a short-term gamble with long-term consequences? Leave your thoughts in the comments below.